Ladies and gentlemen, good day and welcome to DLF Limited's Q1 FY25 earnings conference call. We have with us today on the call Mr. Ashok Tyagi, Managing Director and CFO, DLF Limited, Mr. Sriram Khattar, Vice Chairman and MD, Rental Business, Mr. Akash Ori, Joint Managing Director and Chief Business Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. I now hand the conference over to Mr. Ashok Tyagi. Thank you, and over to you, Mr. Tyagi.
Thank you and good afternoon, everybody. I hope that all of you have had a good, opportunity to go through our analyst presentation and our result details. In all fairness, it was a good quarter. Our pre-sales number was in the range of 6,400 crores, predominantly headlined by the extremely successful launch of Privana West. Our PAT numbers, obviously, given that they are on the complete contract method, and are driven by the possession letters issued, but again, good at 646 crores. And I think the most heartening number that really, everybody should draw a lot of enthusiasm from is the entire cash flow number, where really, if you see between our DLF and Cybercity numbers together, we did in excess of 2,500 crores of free operating cash flow during the quarter. And that actually does paint itself to an extremely formidable run rate of free cash flow going forward. I mean, the DevCo business continues to run very strongly because of the strong pre-sales. And I mean, there are these big tentpole launches that happen, and which Akash and his team do a phenomenal job of taking to the market. And there are those maintenance sales which continue. Our collections performance has continued to go from strength to strength, which has resulted in the cash flows, being strong as well. And all of this has been, supported extremely strongly by a continued robustness in the rental business, both on offices and malls. And frankly, our faith in the rental business is even more reinforced by the quantum of capex that we are doing on the rental side, both in DLF Cybercity as well as on the non-DLF Cybercity capex. So, frankly, with that, really, I think I'd rest myself and then let's go to questions. I mean, the budget obviously was a very interesting budget. There has been a lot of noise around indexation, but really, once the noise is sort of filtered out, I don't think it has too much of a bearing on the way the sales behavior will be. So, I think with that, I'd hand you over for the question queue.
So, should we start with the Q&A?
Yes, ma'am.
Thank you very much, sir. We will now begin the question and answer session. To ask a question, please click on the raise hand icon tab available on your toolbar or on the Q&A tab available on your screen. You may also post your text questions on the Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. For participants joining through the audio bridge, to ask a question, you may press star and 1 on your touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much, and congratulations on great numbers, all round improvement. Very happy to see that. My first question is on the margin side. If I were to take out the other income which was higher, if you can comment on that as well, and excluding the other income, the margins were little weak. What all products have gone into that margin recognition? If you can give some color, it will be very useful.
So, in all fairness, Puneet, as you are aware, that the reported numbers and the reported margins are based on the possessions issued for a product mix that was sold
Right.
between 3 to 5 years back. as the proportion of camellias possessions starts reducing, and I think now there are just about, I think, 30-35 camellias left for giving possession now. You will see at times some of this slight softening, and obviously it will be buoyed at times by luxury floors coming in for completion, etc. So I wouldn't sort of put too much attention on the historical reported margins. Our embedded margins for new products launch continue in the late 30s, and hopefully with the of Lux 5 during the later part of this year, we should be back to the mid 40s that we have charted ourselves for. As far as the other revenue is concerned, I think clearly with us carrying a cash balance of about 5,000 crores in RERA accounts alone, and about 2,000
Right.
odd crores in addition to that, our quarterly interest earnings on fixed deposits, both mandatory and otherwise, is now running at in excess of 125 crores a quarter. Then in this
Okay.
particular quarter, there was some other interest incomes, including one from an income tax refund that was ordered in the case of DLF Limited, the tax department. And
What was
there
that
was a
number?
one, excuse me,
What was that number? Sorry.
the number of the income tax refund.
Yeah.
I think that the total income tax refund ordered is about 600 crores or 550 crores. And I think the interest component of it is in the range of 80 to 90 crores.
Okay.
And the third point was that there was a provision that we had made for a advance that we had issued, that we had given for a collaboration about 15 years back, and there was a fallout between the landowner and us, and it was all in arbitration. Because of which, at one stage, about 5 or 6 years back, we had made a provision of about 75 crores. We have got
Okay.
finally an arbitral award in our favor, and though the arbitral award is in all fairness at a number far higher than the provision reversed, but since it's open for for further adjudication, all we have done is we have reversed the provision that was made about 5 years back of about 75 odd. So I think those are the 3 points that are there on the other income side. And of course, there's a standard recurring other income, because some of the incomes of our clubs and all also frankly get classified as other income. So that's the ongoing piece. But yeah, this quarter
Okay.
the other income is a slightly higher number than what it normally is.
Understood. That's very helpful. Thank you so much. And secondly, if you can talk a bit about the construction cost, right? While your collections have moved up, construction cost on a quarter-on-quarter basis is actually a little low. Should we assume that this is how it will trend, or is there room for it to meaningfully go up from current levels in
No,
the
no, no.
current fiscal year itself?
No, no, this will go up for sure. And the reason right now is that if you see the launches, I mean the high-rise launches that we have done in the last 15 months. So
Yeah.
Arbor was launched in March of 23. Privana South was launched in December of 24, and Privana West in April of 20, December of 23, and Privana West in April of 24. Only
Yeah.
Arbor has, acquired serious construction pace right now. Privana South contracts and all have been awarded. The contractors have mobilized. Excavations commenced. Privana West, that process should begin in the next couple of months. So really, what you'd see is that maybe in about a couple of quarters, you would actually see construction hitting full throttle.
Okay. And what would that number look like?
I think our construction on an ongoing basis, yeah, we believe that on a full throttle basis from Q3, the construction outflow on the DevCo side should be a number north of 800 crores.
Okay. Very helpful. And lastly, you've also increased the launch guidance in some sense. What are the new projects that you've added there?
So at least for this Puneet, there are no new projects. What's happened is that I think clearly we were understating the pricing expectations from Lux 5, and I think we have rationalized them now. So I think by and large, this 5 or 6,000 crores that's been the increase from last quarter to this quarter is predominantly driven by a more realistic price expectation on Lux 5. The pricing expectations on the Privana family, on Mumbai, on Goa, broadly remain the same that they were in the last quarter.
And also the 11.6 million square feet has also gone to 12.8. So some bit of new
So
project seems to have
that I
also
think
been
is a
added. Yeah.
true up as the final
Okay.
plans of some of these projects have frozen.
Understood. That's very helpful. Thank you so much and all the best.
Thank you, sir.
Thank you. We'll take the next question from the line of Parvez. I'm sorry, Parvez has left the queue. We'll take the next question from the line of Pritesh Seth from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for taking my question. So just first question on, little bit of noise of late which was created in Gurgaon about, little slower sales in 7 crore plus or little higher ticket size category. Obviously not for you guys, but, for some other competitors. So just wanted, your thoughts on, are you seeing at least some exhaustion in terms of price increase, at certain price point. There would be certain section of, customers who are right now probably moving away from the absorption. So just your thoughts on that.
So obviously we haven't seen that slowdown in our case, but I'll really hand over to Akash, who knows this market inside out.
Okay, so see, we've done in about 15 months, as you all know, we've done about close to 22,000 crores of sales, and which includes Arbor, which includes both the Privanas that you saw. They hover around $1 million each unit, you know. So right now, as I see it, the demand is further consolidating, also towards a better and a good product. I say this extremely humbled with the fact that the kind of response that DLF gets today is I strongly believe is because of all the work that we have done on ground, which includes not only of the product but working on the immediate geography and on the infra that we are known to do. So I think the endorsement, Pratish, is of what we see and the kind of response that we are seeing. Very important for you all to know that our bookings are around. We don't do the 5-10 lakh booking, as you know. We charge a 50 lakh rupee booking amount for. So these, first of all, most of the people who come in with this kind of a money are very serious. Second, also happy to report to you, to your point, that even after we sell out, within 1 month, there is the process of these agreements that are signed. That further solidifies the sale, because then you are practically, the customer is signing on the 10% agreement. Happy to report to all of you that even after that, should there be any discomfort in customers, and there have been like 20 odd in the most recent Privana West, I can report to you, have all been reinstated with an additional increased cost. So uh, the process right now, as we go along, is of course how we are going about the whole business and the demand, the latent demand that a DLF product still has, and our delivery schedule and our commitment. So I feel based on all of that, our price points stay where they are. Also, Mr. Tyagi had made a mention yesterday also that if you have seen our collections have been on an all-time high, have been record collections this quarter as well. And you please track us down for the last 6 quarters. You will see what I mean. So therefore, this is a strong endorsement of a DLF brand and of a DLF product. I don't see any slowdown at this point in time. I am being very honest with you. And I don't see anything right now, because right now, as we play the whole world together. Any launch is a global launch for us, whether it's the NRIs, domestic, or other cities in the country. We are seeing very robust demand. We are seeing extremely good customers with good paying capacity, and a very, very good eclectic mix of people coming and buying these products. So that's it from me.
Another thing, Pritesh, because this is a normally a noise level of investor versus real so-called residents. That actually in the sales that Akash and his team have done in the last 2.5, 3 years, the proportion of retrades that have come in the market is minuscule. So it's not that people who are buying are exiting in a hurry by making that, the 50 lakh rupees profit or something. They're all here to stay for at least the medium term, if not in 100% case, the long term, so that erstwhile speculator market continues to be, away from all of these launches.
And also to add to you, Mr. Tyagi, in 9 months of time after every launch, you're almost taking about 35-40% of the cost of the thing. So we are not we don't promote speculators to that point.
Yeah.
Sure. Sure, that's helpful. Just just a follow up on that. I mean, while we remain confident on demand, would you be equally confident on price increases as well? If at all we want to take, let's say in Privana, where we have had a very couple of successful phases. So are you seeing some kind of exhaustion there, or still there is scope of prices going up depending upon the quality of the product that we are going to launch? That means.
No, exhaustion. If you're saying again, I don't work in one geography, Pritesh. So for me, as I said to you again, I repeat, the whole world is one playing field for me. When I launch, I do a global launch. So it is not restricting me to one NCR geography. My customers today are coming from all over. I have a very strong NRI pipeline as we reported in our closure of last year. We have a 25% top line. So please understand, for us, when we launch a product, for us, our outreach is all over. Plus again, I reiterate the fact that people are today endorsing a DLF brand and they're endorsing a good DLF product. So, and I see, and let me put it another way to you, that these are only what, how many? The next launch will have another maybe 800 to 1,000 people. That's all. You're looking at it from the overall number of 8,000, 10,000 crores. I look at it from the point of view units. So for me, an 800 unit is to source, say, about maybe 1.52 times the people all over the world.
Yeah.
So I'm sure somebody is doing well at that point in time who's going to be affording this particular thing, and that's about our principles. That's how we've been operating.
Absolutely, that's pretty helpful. Second, on the cash allocation from here on. So last year we have had like couple of big transactions, one Mumbai, one in Gurgaon. Will we have a plan of at least signing up like couple of projects in a year, considering the kind of cash flows that we are generating, or we would just be opportunistic in terms of investing into these newer projects if it makes sense from margin profitability perspective?
So, I mean, while we have broadly always indicated that we would like on a medium term basis to allocate our free cash flow to growth and shareholder returns on broadly a half-half basis. But I think, it will depend year to year. There is no set, I'd say target that we have to acquire 10 million square feet of GAV or something, because frankly, we have enough GAV of our own. But clearly, like we did in Sector 61 or Mumbai, if there's an interesting opportunity that crops by, which has which is available at the right cost and in a market which is either underserved or contiguous to the market we are, we'll always be open to it. But frankly, it's not that we are aggressively pursuing any inorganic opportunities as of now.
Sure. Just one last for Sriram sir. On the SEZ leasing, I mean, it has almost remained flattish in last probably couple of quarters, I would say 85-86%. How do you see the trajectory going ahead? Let's say by end of the year, what kind of leasing targets you have internally for the SEZ portfolio specifically?
Yeah, so our SEZ portfolio before the denotification started was in the DLF system, including DCCDL, 16.5 million, out of which we denotified about 15%, about 10%, about 1.6 million. This has been now, I think 70-80% leased out. And I think as we go forward in the next 3-4 quarters, the leasing momentum will pick up further because of two reasons. One, the Ministry of Commerce and the development commissioners of the SEZs in the various states are now getting to the process of denotification, which in the first 1 or 2 rounds was a little tedious, as people did not know, as the officials did not know what stance to take and how to go about it. Now that process is settling down. That is number one. Number two, if you take Gurgaon, the vacancy in Cyber City, non-SEZ, which is about 13 million square feet, is only 2-3% now. So any new inquiry that comes in is shown the likely vacancies to be coming up in SEZs or the existing vacancies for them to take up. So I am cautiously optimistic that in the next 3-4 quarters, this will show a lot of traction.
Sure,
Uh,
that's helpful.
I may also share that we have sort of the rental rates for the non-SEZ or the non-processing declared areas are slightly better than the rates that we get on SEZs.
Sure. But no specific targets on leasing as of now, right? I mean, it would be as and when it
We
comes.
have year-end targets. Our vacancy today in offices is about 8 odd percent. We plan to take it down to overall to between 6 and 7%.
Sure, got it. That's helpful. Thank you. That's it from my side, and all the best.
Thank you. We'll take the next text question from Parvez Kazi from Nuvama Group. And the question is, what are the completion timelines for DT Gurgaon Block 4 of 2 MSF and DT Chennai Block 3 of 1.77 MSF?
Okay. I'll take that question. Downtown for Gurgaon, the OC is expected by the end of this year. However, after the OC comes, since there is a fair amount of other development, landscaping, and other work to be done, we think this building will complete in all its ramifications by February, March next year. Downtown 3 in Chennai, we expect the OC to come in end August, early September, most likely September. And by the time the landscaping and the other things are completed, it should be by the end of this year. However, our handover to tenants will start in once the OCs come. And for both the projects, we expect the rental incomes to start flowing in from May next year.
Thank you, sir. We'll take the next question from the line of Praveen Chaudhary from Morgan Stanley. Please go ahead.
Hi, thank you so much for taking my call. I have two simple questions. One is the launch timeline for some of the projects that you are expecting in the second half festive season, especially Mumbai project. Also, in the Mumbai project, we saw last quarter in your presentation, it was in the premium segment, and now I find it in the either super luxury segment or luxury segment. So, was there any change in expectation of ASP there? And my final question is related to a question that you might have got earlier about Gurgaon market. The ASP increase is quoted very high in different media and different reports by JLL, etc. I just want to understand if such kind of ASP increase is visible, would it attract speculators, even though I agree that last 2 years you may not have seen, but are you seeing in the last 3 to 6 months? Thank you.
Okay. I'll address the launch sales pipeline piece and then refer to Akash for the average selling price increase question. So our launch pipeline remains what we had indicated earlier, which is that hopefully, if all approvals come in time, we should have the Goa launch in this quarter before September end, and we should have the the Lux 5 launch in the next quarter. Mumbai, right now the approval process is on along with the requisite, clearance, etc. The first slum rehab building of about 35 odd stories is ready now, and I think the shifting of the erstwhile, tenement dwellers will begin. So we are expecting that again to hopefully get launched by December, maybe overflow till January, but I think December is the target right now. And Q4 should see one more launch of the Privana family. Whether it's in the Privana landscape or adjoining one, I think is open to discussion. But clearly, one more Privana light product should hit the market in Q4. In addition to this, there will be small launches of Chandigarh and a couple of commercial launches.
So with regard to your ASF and in attracting the investors, I think we mentioned in the previous conversation also that for us, our intent has been to look at retail customers. Our intent has been over the last 2 years. We have deduped our list. Even if somebody is asking for 2 units, mostly we say no. Our intent is to spread our base to as far as we can so that we can seek that end customer, and that is how we have been going about our business. So as far as investors are concerned and speculators are concerned, there are two things. One, that our price point entry barrier itself is very high. So that is the first level. Second, should we see somebody repeatedly trading or not retaining their properties, we generally put them last in our priority. So the allocation process also, as it goes, should we find any amiss, and our checks and balances are on a monthly basis because these are linked to our collections. So therefore, anytime collections flags off a name or an occurrence which is other than what it should be, the systems then kick in and identify those problems and then get in. So that is how we have put our checks and balances. So therefore, speculators to a large extent, I don't think we would attract them, or even for them, it's not going to be easy. So I think for us, we want to play it absolutely, safe and low down. I feel that for us, it takes a lot of effort to reach to that end customer, and we are happy to do that. Our systems are geared up to do that, and that is what we do on a daily basis. So we mine irrespective of the launch or a product. We continue to mine every day for a new customer, and our various categories and various price points are open, and therefore we keep putting them in various buckets as and when we launch, and we know what category they are and what level of investments they want to make. And as and when we launch post our radar approvals, then we reach out to these sets of people who we have continued to mine, as I said earlier, and then that's how we operate. So I hope, Praveen, if that has answered your question.
Yeah, that's very, very clear. Thank you so much, and congratulations for good collection, good operating cash flow, as well as strong pre-sales.
Thank you.
Thank you. The next question is from Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi, good evening. Firstly, you have rationalized the pricing in your new launches. Does that make any changes to your full year guidance and for your pre-sales of 17,000 crores?
So right now we are not officially re-guiding you to a higher number, but I think it's a logical, conclusion that there should hopefully be some upward bias to that. Maybe, wait one more quarter. By the end of next quarter, we should be far closer to our actual launches, and hopefully, I mean, again, as we had mentioned last time, the 17,000 crore number basically still budgets in about a 90% plus sale level on all other launches, and a small introductory sale level on Lux 5, and hopefully that's where possibly the upside could come in. I think, hopefully by the time we are again, talking to each other in October, we'll really have a completely trued up number of this.
Also,
Sorry,
what's
just to
happening,
follow up.
Akash.
Sorry.
I'm just adding to what Mr. Tyagi just mentioned, Kunal, about there's also a very strong second market that we monitor. And happy to report two transactions in the second market in the last 1 week. One of Grove, which is in the DLF geography, which is crossed 30,000 rupees a square foot. And recently, just today, an hour back, we closed a Crest 4,000 square feet unit at 49,500. It's touched 50,000 rupees a square foot, Crest. So, again, no matter what we say, obviously you can take with a pinch of salt. But please, if you monitor the kind of work that is happening on ground in terms of the second and third sales, you will understand where these price points and where these customers. These are all they're not speculators. They're people who are buying for themselves or their family. So therefore, the valuations that you will see obviously will have to reflect the facts on the ground.
Understood. And the fact that you said that all the excluding Lux 5, the rest of the launches you're expecting at least 90% to be sold out. I mean, that clearly puts you northwards of that 17,000 crore numbers. So,
We hope
anyways,
so.
yeah. As on the collection side, right? Your collections, say excluding Privana launch, right, should be around say about 2,500 crores now. Would that be an accurate number?
Excluding Privana, how much was it? Excluding Privana West. Yeah, so you're right. It will be about 2,600 crores excluding the Privana West. You're right.
And that
And
number
again,
should also go
Kuldeep can give you the more details offline. So I don't have those
correct.
numbers frankly
It
available
will
now.
be it will be about 27,800 because
27,
uh, yeah. So you take out the Privana recent Privana West, about 800 odd units. So yeah.
Sure. So this number should also inch up considering your last year's sales number and then Privana also contributing from like say next quarter onwards, right? This number should see a significant jump.
So no, I think now, frankly, the numbers are, they are reflecting the regular installments of both
Mhm,
Arbor and Privana South. The
mhm,
Privana West installments will start coming in now from maybe Q3 onwards. So, but the fact is that in the first 6 months you collect about 35%. So there's a significant upward collection that also then eventually aligns itself with the construction milestones, etc. So I think the number will stay in the 3,000 odd crores range. Again, the new launches could occasionally provide a bubble, but ballpark this 29 to 3,000 crores is, I think, what a quarterly collection for the next 2 quarters at least should stay at.
Sure. Just to follow up on that, Arbor would have been now like it must have been at least a year and a half since Arbor's launch.
15
Um,
months. Yeah.
15 months. Yeah. So how much would we have collected in that project by now?
Almost 45%.
45%.
45%.
Yeah.
Okay. So like 15 months, 45%.
Yeah.
Okay, understood. My last one is a bookkeeping question actually. We used to have this surplus cash potential slide, until last quarter, which is not there in this quarter. If you can give some details from that slide, in terms of balance cost of construction on
Okay.
resi as well as
Yeah, yeah.
yeah.
In all fairness, I'll tell you. I mean, so we had the data Kuldeep will give you. We just thought that data, in all fairness, Kunal, was a legacy of the time of the cash crunch times when you wanted to convince analysts and more importantly convince yourself that you will have the money to complete the projects. I think really with the RERA now being at scale, that risk no longer exists. But you're right, we have that number. I mean, I'll give you off the cuff. Ballpark, our receivables of the projects that we have launched till 30th June is about 21,000 crores have to be collected. We have about a 10 and a half, 11,000 crores is our total cost to complete. Of that 11,000 crores, 5,000 crores is already residing in the RERA account today. So basically, of the 21,000 crores collection that is to come, about 6,000 odd crores will need to be spent more on construction, and the balance really would be margin. And in addition to all of this, we have about 3,000 crores of ready inventory,
Mhm.
including a few camellias, which obviously will also be 100%, sales realization. So we had that slide.
Sure.
We just didn't put it here.
Yeah,
We'll restore it if on popular demand if you want from next part.
yeah, that will help. And also the capex on DLF as well as DCCDL balance.
Okay, so Shriram.
So on DCCDL, this year's capex will be 1800 to 100 crores. And going forward in the next 2-3 years, this will go up by about 18-20% uh, from this ballpark figure of 2000 crores.
Okay. And on standalone, that number was about 700 crores balance capex. That would be slightly lower now, I'm assuming.
On the standalone, matlab?
As
On the
in
DLF
DLF,
side, yeah. Yes,
DLF
yes.
side.
So the residual capex on the 3 malls that DLF is constructing is about 600 crores, ballpark. This is 700 crores, 700 crores, and the residual capex on the Atrium Place, which is a JV with Heinz, is again about 700 odd crores. Yeah,
Understood. Thank you so much and all the very best.
thank you.
Thank you. The next question is from Abhinav Sinha from Jefferies. Please go ahead.
Hi, Khatta sir, on DCCDL, maybe I missed this, but what is the driver of the jump in rentals this quarter, and what is the exit run rate we are looking at?
So the jump in rental is a combination of two things. One, the accrual that comes on an annual basis, and the other is the start of the rentals in Downtown 1 and 2 in Chennai. The exit for this, which we had given the guidance earlier, is 5,000 crores. But next year, the jump up will be rather significant because Downtown 4 and 3, Downtown 4 in Gurgaon, Downtown 3 in Chennai, and the full rentals of Downtown 1 and 2 will come into play. And therefore, this will go up significantly in FY26.
Okay, so north of 60 billion, 6,000 crores next year?
So my sense is it will be, whilst I cannot officially say, it will be about 5,800 to 6,000 crores.
Okay, very helpful. So on the DLF mall plus atrium that we are constructing, can you give us some similar guidance because some of these are nearing completion also?
Yeah, sure. So Atrium Place is as you know, a joint venture with Heinz where DLF owns 2/3 equity. The total which we are building there is 2.9 million. There are 3 blocks of about 650,000 each and 1 block of 850,000. The first 3 blocks, the OCs will come between January, February, and April next year. And block 4, which is the bigger block, it will come in October next year. The rentals next year will be in the ballpark of 240, 250 crores. Though when all the 4 blocks are completed on a steady state, the rental will be about 580 to 600 crores. I may also share that we've started leasing that and we've already leased about 400,000 square feet. And that is one area of focus in the current year to ensure that we continue to lease the buildings at least 80-90% before we get the OCs.
So similarly for the malls also?
So there are 3 malls that are coming up. I will give you the details one by one. One is what we call the Midtown Plaza, which is the baby mall out of the 3. It's about 200 odd square feet. That gets completed end of this year, and the rental should start by April next year. The next one coming up will be Summit Plaza, where the rentals will start, say, in Q1, early Q2 of FY26. And the DLF Promenade in Goa, which is 700,000, that will get completed end of next year, and the rental of it will come in April 27. April
Okay, so
26. My apologies. Yeah.
April 26. Okay. And this will total up to another, you are saying roughly 250, 300 crores.
So,
So
uh,
roughly
yeah, this is upward. This is 300 crores. Yes.
when all these three are done. Okay.
Yeah. And this is about 1.3 million.
And any plans to sort of retain them or transfer to DCCDL? Any thought process there?
या वो जब एक बार बन जाएंगे, once they are in a final rent yielding mode, at that time we'll talk to Mr. Khattar and GIC, and depending on how the two of them decide, we'll discuss.
Yeah, but having said that, at the excellence in maintaining the excellence of tenancies, the excellence of operations is seamless between whether the asset is owned in the books of DLF or in DCCDLF.
Right, sir. We know that pretty well. I mean, Tyagi sir, one last question from my side. On the IREO piece, we are expecting a launch next year, right? I mean, is there anything outstanding legally or payment-wise, or it's just the
Really,
process of planning,
so
etc.?
there basically two major parcels. One is the 19 and a half or 20 acres. One is 7 acres. The 20 acres was already a group housing license, so that usme the transfer of license process is going on. I think that should really be completed in the next, very short time. The balance 7 acres was a part of a plotted license, and there's a migration of license exercise. There's a certain protocol process in the government that's going on to convert it into a group housing license, and the two of them will be combined. So I think by the time both of them are done, we expect it will be end of this calendar, definitely for sure, if not end of this fiscal, and hence the plan to launch it in the early part of next year. Yes, there will be some governmental charges, etc., that I think are due, but I mean, if you recall, the total cost that we had paid and committed for the entire 28 acres to the sellers was about 1250 odd crores, and I think the all told the approval, etc., for getting it to the requisite 3.5 FAR is, I think, another 4 to 500 crores. Some of it which has been expended, some of it will be expended across the next 3 to 4 quarters.
Okay. So thanks and all the best to the team.
Thank you.
Thank you. The next question is from Puneet Gulati from HSBC. Please go ahead.
Yeah, thanks for the follow-up opportunity. So the land acquisition payment of 413 crores this quarter, does that relate to the same IREO thing or is it for some other land parcel?
Actually, it does not. So about 225 or 230 crores of it actually, it was a question of how do you classify it. Is actually the TDR payments for the Privana TDR. So what happens in TDR is that basically either you have surplus land, which right now we don't have, or you acquire those sort of licensable or those TDRable lands from the market and then send it to the government. The government gives you the TDR certificates. So this 230 odd crores is the land cost of those TDR certificates, and the balance 170 odd crores is some partner payments to our collaborators and some smaller land acquisitions for contiguity. But the big chunk here is TDR. I mean, just to sort of bring everybody up to speed, the total cost of TDR land plus approvals milake runs to about 1800 to 1900 rupees a square foot, which frankly, given the sale prices of 20,000 plus, is a fraction. And the residential cost of residential TOD is actually under 1,000 rupees a square foot. So obviously we do want to maximize the TOD and TDR entitlements, not blindly, but in the places that we are launching.
Understood. And the government charges of 330 odd crore that excludes this TDR payment then.
So जो TDR का land payment है, that is in the land charges, and the approval charges, which is normal license fee, TOD approval charges, TDR approval charges, those will get classified in the governmental charges.
Okay, understood. And lastly, you also talked about potentially maybe buying some land parcel which is interesting. Would you ever be looking at Dwarka Expressway market, or you'd largely focus on your side of Gurgaon?
I don't think Mr. Ohri is interested in Dwarka Expressway right now. So I mean, currently, no, yeah.
Puneet, we've got so much happening on our side of the place, so I think we'd like to stick there.
Okay, understood. Thank you so much and all the best.
Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to Mr. Ashok Tyagi for closing comments. Over to you, sir.
Thank you so much. I mean, it was a very engaging discussion. And, obviously coming off a decent quarter, I think, I mean, you guys asked everything that there was to ask, especially about the launch pipeline, about the rental business, CapExes, run rates. And I think we'll continue trying to, carry on the good work on both the Rentco and the Devco side. I mean, currently, frankly, is one of those virtuous cycles where the markets for both residential, retail malls and offices, all the three segments where we operate in are all witnessing an upcycle. So without getting reckless in terms of, in terms of launches or pre-sales, we will continue to sensibly keep on launching and monetizing the stuff that we have, and hopefully continuing on our journey towards cash flow and margin. And I think really hope to see all of you again in October. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of DLF Limited, that concludes this conference. We thank you for joining us, and you may now exit the meeting. Thank you very much, sir.
Thank you.